studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hi there, welcome to the COB on this Thursday afternoon. I'm Nadine Blaney.
I'm Juliette Sarli, and gosh, what a roller coaster of a ride we have been on today. We thought we'd see some falls, but not this.
Yeah, it's gone from bad to worse. And why? Because of headlines out of the Middle East. So I know that you've heard us say that many, many times, but we did have news that the US and Iran had exchanged strikes, and that was enough to really send sentiment sour post about 1 p.m. here in Sydney. And it's not just that we're alone in that either, Juliette. I mean, we've seen stocks being sold off around the region, strength in the US dollar, oil up as well.
Yeah, indeed. And in fact, when we look at this loss, it is the biggest loss that we have seen since March, although let's put things in context. We're only about up to June, aren't we? So the biggest loss in 3 months.
Yes, that is true. But as I look at my market map, and I'll just turn it around for you, I mean, really deep falls coming to the likes of the materials space, infotech. We'll get there in just a minute. But yeah, it's this market meltdown that really has investors sort of wrong-footed. It just seems as if a ceasefire doesn't mean ceasefire when it comes to the Middle East.
Yeah, and some pretty tough words coming through from Truth Social again from US President Trump regarding Oman, overnight too. Now, all of this has sent oil higher, so crude awakening, Brent climbing after that fall. So getting back towards $100 a barrel as these US forces carry out airstrikes on an Iranian military side and offsetting some of that optimism that we were talking about earlier.
Yeah, so look, we will continue to keep watching brief on that. Also, we're watching gold and the Aussie dropping. But we had our monthly inflation read here locally yesterday. Tonight, we get US core PCE data release. So again, really firmly focused on the inflationary impact of this war in the Middle East.
Yeah, and I had a great chat to Nick Twidell from ATFX earlier on the trade, which of course you can play catch up and watch, and he was saying this is just so key, as we know, in terms of what's going to happen next with the greenback as well, and that flows through into all of the currency moves. Getting back to the equity markets though, let's have a look at some of the mining stocks. It was the worst performing sector, the materials sector, Rio down 2%, but a lot of that weakness was because of what happened in gold as well. So those gold players coming under very hefty selling pressure. Newmont, they're off 6%.
Yeah, that is a big fall there for Ramelius as well. Northern Star off by close to 7.5%. Silver also really getting knocked about. I don't think it's any big surprise when you think about what's going on in the geopolitical landscape, and no surprise that you're watching the vast majority of these energy plays lifting, and Karoon lifting by the most, 3.3% to $2.01 for those of you listening to this in podcast form, and that's because it's so closely linked to the price of oil.
Now, it wasn't really a very strong corporate news day, but we did hear from Select Harvest. So it actually rose the most in 2.5 years on its strong interim profit. And gosh, that takes me back to my 11 a.m. interview with Henry Jennings when we were saying, oh, not much was happening today.
Yeah, look, it's done good things for the Select Harvest share price. Always want to know what the supply-demand situation is for almonds. Apparently pretty good. Centuria Capital, it was updating investors on its AI compute partnership. Well, revenue is expected to hit $800,000 in the first half of 2026, but rising to $15 million, it pegs it at annually, and the share price did pretty well off the back of that.
And SiteMinder, well, that was the stock of the day on the call. You can tell us about that in a moment, but it was up more than 8% after launching its powered platform with Muse as its first partner.
You'll have to wait for that one. There's a tease. Endeavour, so yesterday one of the worst performers, hit a record low today after Jefferies says that strategy update is very uncertain, and that's a quote, so ending the day at $2.87.
And a new managing director for IPH with Anthony O'Malley to take the helm from Dr. Andrew Blattman, who's retiring.
Yeah, so there wasn't a whole lot of corporate news out there, but probably a good thing because, you know, investors are very focused on the geopolitical landscape. And of course, we had many conversations still about the NASDAQ, about AI. Dan Ives comes to mind. He is still a huge lover of NVIDIA. And Sam Ruiz from T. Rowe Price here in Australia, talking about how they're reducing their exposure to the Mag 7 and looking for other ways to play that AI trade as well.
And I spoke to Jeff Marshall from CI Global, and he was talking about how you sort of get exposure to AI and the space theme through private markets, which was interesting.
Canadian bloke, yeah?
Yeah, he was Canadian. All right, let's welcome to the COB Clifford Bennett from PropX24, who has some props as well, Cliff.
Sorry? Oh, well, I wasn't sure if you wanted me. Well, I've been trying to work out the geopolitical scenes. So of course, that required a little bit of juggling. But I feel that, thank you for that. I've always wanted to do it. I feel that, enough of the laughter, I guess. The situation in the Middle East has become a little bit dire, and the Australian stock market might have priced a little bit too much in terms of a knee-jerk reaction at first. But the background story is that they were very significant strikes by the United States again in that port, Bandar Abbas. And I noted at the time when the first round of strikes occurred that the naval captain who spoke about what made CENTCOM's announcement, he said part of the reason was to keep our troops safe. And I put out a report saying, read between the lines, there are troops in the area. But it does start to feel like these further strikes in the same areas. It's starting to feel like the US military is softening up defenses for a larger scale attack. And it is a very strategic location. And if you were going to put troops on the ground in a major way to take a strategic advantage, that probably is could be an objective for that. So that all remains to be seen, and that's conjecture on my part. But I think it is something for people to keep in the back of their minds, that what if this war does become devastatingly worse again? And it seems to be unraveling at all of the corners at once at the moment. And also President Trump's request for all the Gulf states to normalize relations with Israel. It's kind of a non-starter in terms of domestic politics for most of the nations that he listed in that announcement. So things are getting very difficult to move forward. And the Iranians do not seem to be at all reluctant to resume hostilities either. Attacking a US airbase, I think that would be in Kuwait. Kuwait has said it had a lot of incoming drones and missile attacks. Obviously, some of those were intercepted, but perhaps not all, but we will never know. That's the nature of this war. The situation is getting worse, unfortunately, just when we thought it might be safe. And so markets are beginning, as you said at the start of your program, to factor in these higher risks. But I think most of the people who are trading the markets today see this as having to respond to these events, but not really seeing a complete derailment of the peace deal, not seeing that this will lead to a full-scale resumption of war. But the situation in Gaza and Lebanon is dire and getting worse by the day. So the Iranians again are going to be reluctant, because they previously said they needed a ceasefire in place with Lebanon before they would agree to a peace deal. So all sorts of forces are coming to bear on this peace movement. And there are indications the US military is preparing to do something else, and that could be part of the negotiating tactics, but they're clearly up to something, and so are the Iranians. I think the impact for Australian markets could be very severe. Sorry, I've monologued a little bit, but I've got a couple of numbers for you.
Well, let me just ask a question, okay? So what will it mean for the Australian market if you've got some of these numbers to go through, Clifford?
Well, I think if we get a resumption of war, now I would say it's only a 10 to 15% probability at the moment. But if you're going to manage risk in this high stakes geopolitical environment, you have to consider all the possibilities and manage your portfolio accordingly. So 10 to 15% risk of all out an even worse war than before. That could drive the Australian market down to around 8,150, the ASX 200, could drive the Australian dollar down towards 68 cents. But that's on a resumption of a full-scale war. Should the war last again another 1 to 3 months, then you get downside risk for the Australian dollar of about 10% overall, which puts it down at 67, 65 cents. and the Australian stock market, the ASX 200 down at 7,500, maybe 7,200. I think the impact for the broad stock market would be worse. Now, that's not to say all stocks will be in that sort of degree of trouble. Obviously, these are resource wars. We're going to have resource wars for years to come. Sadly, now I believe the gloves are off for all parties around the world to seize resource assets wherever they can. And that means that resource companies are going to become almost a military asset long term over the 3 to 5 year horizon. So those sorts of stocks are going to be heavily bought from all sorts of corners of interest, if you like, in society. And I also think you have to think about AI and robotics in a similar way. I mean, look at someone like Tesla, the robotics there could have military implications going forward, and that will be a company that will be well supported by massive US investment at some point again. So I think there will be standout stocks that are resilient. But in terms of broad market behaviour, if Australia were to reach the point, why I use those numbers of an immediate war is people get worried about fuel shortages. But if the war goes on for 1 to 3 months, we actually have fuel shortages. And in that environment, where is the correct value of the equity market if an economy is in recession because of energy disruption? And that could well be 10 to 15% lower for Australia. Now, again, it's only a 10 to 15% probability of that 10 to 15%, but it's worth being aware of. And I just thought I would map out, the scenarios that people should think of defending against if this situation does continue to escalate, as it does seem to be doing.
So you mentioned some stocks. Give us some names.
Well, BHP's performed really well. Fortescue hasn't performed as well because its major clientele is China, and could there be complications to that? So I think if you have to look at individual stocks within individual countries with a very strong geopolitical lens at the moment. But if you understand that people after the war even will be wanting to build up their energy reserves, their oil supplies again, it means that even if oil is sold off on a peace deal, that in the longer term it could well be brought back to these kinds of levels in any case, which maintains inflationary pressures. And the best way to fight inflation for a central bank is to cut interest rates in this environment, but that's maybe for another show. But I do think robotics, resources, AI that will have military implications are going to be the defensive stocks going forward.
All right, we are out of time, Cliff, but always good to see you. Thank you so much. Love the juggling for those listening on podcast.
Yeah, something cheery. Thank you.
Cliff was juggling with some balls. We're all juggling with balls around here, aren't we?
We sure are. But look, let's get back to stocks, equities. SiteMinder, SDR, was the stock of the day on the news that we announced earlier. So with our experts, Adam Dawes and Shaw Partners, Howard Coleman from Team Invest, let's take a listen to what they said.
I've been in and out of this one a fair few times, so it looks quite interesting, and it looks very interesting now that they've put this thing together, because it does feel like it's now starting to break out to the upside on this one, and I think for that MEU or the Muse does give some more bullish commentary around what's happening, but it's also that the Australian accommodation software provider, which is SiteMinder, has more of an incentive, and Muse has more of an incentive to sell SiteMinder products in a partnership that could increase their overall access to new customers.
It's a company that doesn't make a profit. It's a good thing they didn't call themselves Profit Minder, because that would have been something the ACCC could have maybe got upset with them about. But being called SiteMinder is fine. It certainly won't be a good money minder in our opinion when you look at it. I mean, our members would look at this and they'd say it's been listed for 4 years. It's made big losses every year for 4 years. Its return on equity is about minus 40% on average per year, which means 40% of all your money in the company is evaporating in smoke every year.
10 stocks picked by you, 2 experts, 1 hour.
Let's get to the companies that have been nominated by you.
Put a little in both. because you never know where the landmine's hidden.
I think we'll see some upgrades in the next 6 to 12 months. Analysts normally play catch up, so I'm going to call this one a buy.
The call is brought to you by Centuria, an ASX-listed property fund manager with $21 billion in assets under management. Want to diversify beyond equities? Explore the Centuria Sydney CBD Prime Office Fund at centuria.com.au.
All right, let's have a look at the leaders and laggards in a very, very down day. SiteMinder had a great session. We just touched on that with the call of the day. And Centuria Capital as well, up almost 7%. Web Travel Group, which of course came through with its update yesterday. James Hardy and Sims Metal.
I get the losers draw today, and there were many, in particular in the gold space. Genesis Minerals off by 9.5% to $5.60. Perseus Mining as well, lower, and it is undertaking a bit of a buyback. We've got Eagers Automotive as well, so some of the brokers weighing in. Target price cut 9% to $27.25 a share by Morgans. Target price cut by Bell Potter, by Macquarie, and by Ords in the wake of its AGM yesterday.
All right, the small end of town, Antiotech, who we spoke to earlier in this week, having a very good session, up 25%. That's on that battery movement that they're seeing, tying up with South Korea. Strickland Metals, Invictus Energy, did you say CUF?
I don't know.
And Health and Co Wellness REIT. Wow, that's written very. That's for you know you do those things where can you read this if we take all the vowels out? Yeah. That's what that one is.
We might get that fixed for next time around. Sky City is off by 22%. Bella Vista Resources off by 13% to 44 cents per share. Gosh, I guess we've got to juggle more of these bowls, Juliet, to bring this up to scratch. All right, let's look at what's happening overnight. We've got a preliminary quarterly GDP read coming out of the US, 2% growth expected over the past quarter. We talk about that inflation read that we're expecting as well for the month of April. So big night tonight with new home sales as well coming through.
Yeah, indeed. All right, tomorrow, Friday, a few AGMs, including DroneShield and Life360 too, that a lot of investors will be very interested to hear what they've got. And then some earnings reports from Findy and Straker.
Yeah. All right. Let's just take a final look at the local market and to put it in perspective where the S&P ASX has finished as well. Because, as we mentioned, with news of this unrest, strikes being exchanged between the US and Iran, we did see a big sell-off happening throughout the afternoon. The S&P ASX 200 down by pretty close to 1.5%, 1.43% to be precise, about 125 points to 8,593. It's just, give on one hand, take away on the other, all of it being dictated by what's going on in the globe.
Indeed. All right, well, we'll see what the headlines and how Wall Street reacts to all of this geopolitical ongoing uncertainty and what that means for our market for the final trading day of the week. And will it be the last one of May as well? Yeah. Yep. Okay, so we'll be there for tomorrow. Well, I won't be, but you will be.
I'll be here.